Which one of these two stocks is the best one to buy now? Cloudflare or Zoom Video Communications? I'm going to answer that question in this video, comparing the two across 4 different metrics, starting with revenue growth. So let's get right into it. Of course, Zoom Communications absolutely thrived during the pandemic. Look at this revenue growth explosion, going from a mediocre 100% revenue growth all the way up above 300% revenue growth for several quarters. That just highlights the degree to which Zoom thrived during the pandemic. It was an absolute explosion. Cloudflare, it made Cloudflare's robust revenue growth over 40% look minuscule for a bit of time in 2020 and 2021. Although Zoom has come back down to reality as schools have reopened, as people have returned to work, and now Cloudflare is edging Zoom in terms of revenue growth at 41.89% compared to just 4% for Zoom video communications. The next metric I wanted to compare the two on is operating margin over the trailing 12 months. And looking at this metric, Cloudflare is showing very nice growth in this metric in approaching profitability, demonstrating that is getting better as revenue is growing, right? Going from negative 40% operating profit margin all the way up to negative 20.63%. Now, negative profit margin is still not good, although what is good is the trend of improvement. Meanwhile, Zoom Video Communications has this sort of igloo pattern forming where it was slowly growing its operating margin, and then of course as it exploded, as revenue exploded during the pandemic, so did its operating profit margin, soaring above 24%. It gave a little sneak peek to investors what Zoom could be in the long run if it reaches that kind of growth at scale, right? One of the benefits of the pandemic for Zoom was not only that revenue was soaring, it was that revenue was soaring without Zoom really needing to try very hard. That means lower spending on sales and marketing while those revenues were soaring, right? Because if everybody's coming to you for your business, you don't need to spend very much on marketing. You can decrease your sales staff and just automate the process online. That allows your operating margins to expand. But now that economies have reopened and people have returned to school and working at the office for a couple of days a week, Zoom has needed to work harder to capture those sales, right? Needs more salespeople, needs more marketing, needs to connect with the clients more often to try and convince them to make that sale. And so operating margins have come down all the way to 5.59%, but still better than Cloudflare at negative 20.63%. The next metric I wanted to look at is cash flow from operations to sales. This is a common theme with tech stocks in that they use significant amounts of stock-based compensation, which makes its net profits look worse than their cash flow from operations because stock-based compensation is a non-cash expense. And looking at this metric, you see Cloudflare again showing nice improvement and turning positive 12.67%. Still, even though the trend is better than Zoom, overall, Zoom's cash flow from operations of 29.37% is more than twice as good as Cloudflare's 12.67, even though the trend is downward. But that seems to have flattened out so far, and it might be flattening and then for room for expansion. That remains to be seen. For now, what we see is a downward trend that has moderated and flatlined for Zoom. So the final thing I wanted to compare these two growth stocks on is their valuations, and I chose to use the forward price to earnings ratio. and the forward price to sales ratio. And looking at these two metrics, Zoom is significantly cheaper than Cloudflare, especially on forward price to earnings. Look at this. Zoom at 16 compared to 360 for Cloudflare. And then looking at price to sales forward, Zoom at 4.3 compared to Cloudflare, which is more than twice as expensive at 10.85. So although Cloudflare is showing better growth in better trends in the growth of its revenue, operating cash, operating profits, and cash flow from operations, overall Zoom was better in those metrics. So combining the better valuation with the better overall performance, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I'm going to say Zoom Video is the best growth stock between these two to buy right now. Okay, so that's all for this video. Thank you for watching. If you enjoyed this one, I'm going to link to two other videos that I think you will enjoy. So please go ahead and click on those, and I will see you over there.